Peace and blessing, family. This is Master B here with a master class on keeping it simple, right? So today we had a nice movement down today, and this is for my new people who are coming in, learning this skill set. Okay, first of all, we want to keep it very simple. Now, I know you hear that a lot of times. Just keep it simple, right? I too myself have a tendency of, overcomplicating things, and I guess that's just the human nature side of us. But we just want to keep it simple. Your drawing tools in your minds, as I will repeatedly say, is the most powerful indicator on the charts. Okay? So you're going to mark off what you see, what's happening. So this morning at 8 o'clock, the market went and created a supply zone, couple of supply zones, right? Supply zones are areas where the seller stepped into the market and pushed the market down. Okay, those are your supply zones. So you just want to kind of, mark them off on your chart so you have an idea about what's going on. When this goes back, up into this area, sellers are stepped into the market around this price level, right? So let's just fast forward a little bit more. Now you're starting to see evidence of this high being lower than the previous high. Just these boxes alone tells you that the market is stepping down. Until price action breaks these higher highs or these supply zones, this market is going down to the next area of demand. Okay? Sellers go down, they're looking for where did the buyers step into the market, right? Now this is on my 15-minute chart. Let me take a step back. Normally I would go up to my hourly chart and I will identify where is my supply and my demand zones off of my hourly chart, right? So you see this massive move that went down during the London and Asian session? Well, there was an area up here where sellers stepped into the market to push that market down. Okay? On my hourly chart, I closed that chart up because once she started breaking these lows or market structure area, I have to look to the left to find out where is the next possible area she can be going. Okay, so down here you had the buyer step into the market. So this area down here we want to mark as a demand zone. So that not to get confused, just change the color. Change the color so that you know that that is your hourly demand zone. As price comes down into this, what we want to see is we want to put on our investigative hat and we want to see what is price action going to do when she gets here. Now what I like to do is I like to have one below just in case she breaks through there. I'm not reanalyzing. I'm going to have at least 1 or 2 levels down in the event that that area gets broke, so that I know where is my next possible target. Now in between here we have a little hiccup in the road that might prevent price from reaching the main demand level. So I just marked that off with lines and not necessarily a box because it is in between the main demand zone and the one that was created up here. So this is like my intermediate. All right. So off to the roast we go. Boom. Now, isn't that amazing? I want you guys to really look at this and observe this. Let me open up the chart so you can see that. So I identified off of the hourly chart, right, an area where it might possibly cause some support. And notice how she stopped dead in that area. This video is not about teaching how to get in, where to exit, or risk management. I'm just clearly showing how these markets are repetitive. They go back to where they came, because down here is a pool of stop orders. So underneath all of these levels are pools of stop orders. So the market is seeking out that pool of free money. Bam. I just wanted to do a quick video on how the market repeats itself by once a gap is created, a gap will be filled. This is Master B with a quick recap of what happened this morning. Hope everybody had a successful trading day. Master B out.